Hey team, it's Walker Dybel, author of Buy Then Build and creator of the Acquisition Lab. Today, I'm going to talk about something that I normally talk to sellers about, but then we're going to ask the question coming from the buyer side, right? In other words, one of the number one most common things, that business brokers will do is work with a seller to decide, answer the question, should I sell my business right now, right? And in when I'm talking with sellers, there's really three things that I'll kind of begin to ask them questions around it to try and understand. And the first is them as a person, okay? And essentially, when you start a business, you're really excited, okay? So we'll put it kind of up here on the sort of excitement scale. All right, then let's say it succeeds and you start making money, okay? And so you get even more excited, but eventually one's interest in running the company starts to wane until, maybe at the age of 65 or something like that, it just sort of shoots down to zero, right? And so the thing is this is sort of like the interest level of the founder or CEO to continue managing the company. And the truth is you don't want to wait as a seller until you're like out of gas, right? You don't want to be like too far down the waning process. But somewhere up here where you still have some spirit, but you're starting to recognize, that the trend is starting to decrease is probably, if you were going to line up the perfect time to sell your business, it's probably there. When you're still excited about it, you still have some gas in the tank, but you're sort of recognizing the kind of trend, right? Then you've got the business itself, okay? So we'll put business here, business. And this is going to be, you get this startup phase, and then you get this like high growth adolescent phase, and then ultimately it starts to level off, and eventually either a decline or rebirth, depending on the industry and what's going on. But this is really the cycle of the company, right? And the number one mistake, okay, that sellers will make is they'll wait until the growth curve, kind of starts to level out, right? And what they really want to do is be, selling the business while the growth curve is up. Why? Because growth and earnings are the fundamental drivers of value. So if you've got a big tailwind on your company, that's a really good place to sell. And if you were truly going to time it perfectly from the sell side, you'd probably want to sell like somewhere, towards the end of the growth curve, obviously leaving some future earnings there for the buyer, but in theory you've sort of like achieved all of the kind of value that entity is going to generate under your control, okay? The last one is going to be the M&A market, okay? So the M&A industry really kind of cycles up and down, okay? Almost in like a boom and bust kind of scenario, okay? It's like a sine wave, and so it cycles. And so even, just in online businesses, I think it was back in like 2018, 2019, I was even saying back then, this is the first M&A upcycle that online businesses have been mature enough to be able to participate in, okay? And now in 2021, we are very much in an upswing where I can't tell you, but probably somewhere near the top, right? And so if you were a seller and you were going to time this perfectly, where would you do it, right? You'd ultimately want to try to sell your business at the absolute peak of valuations in the cycle, right? When M&A is popular, when it's a seller's market, and those valuations are up. And so the reason I want to bring this up is one of these things where, this is a topic I talk to sellers about all the time. And if you really flip it around, you can kind of ask yourself, when's the right time to buy a business, right? And, but first understand, the odds of a seller being able to actually line up each one of these three concepts is like impossible. First of all, it never happens because they're not building their business to sell it usually, right? Sometimes that's the case, but even then, you're not necessarily thinking about all of these things. It's more going to be here, right? The business part. And so the thing is like, sure, okay, let's talk theoretical for a minute. If I were a buyer, what's the perfect time to buy? Well, if you try to buy when the market's absolutely at the bottom, the problem is you don't have access to capital. This is when banks dry up. It's really hard to get capital. But if you have cash and it's, the deepest valley, after the tech bust, the deepest valley during the Great Recession, in the real estate crash, the deepest, darkest hour post 9/11. If you have cash, then yes, this is going to be your time to come in and be able to buy companies inexpensively, okay? And so there was a lot of noise, by the way, around this during COVID. And there sure is, there's been some opportunities, but that's a different video. But over here, where's the best place to buy it? Well, I'm someone who believes that a lot of buyers make the mistake of looking at the business as an entity outside of you, right? And when you're the CEO, you are the most important person in control of this graph, right? And so, in theory, we're going to look at it and say, well, geez, if I could pick it up right here, you have sort of this like fragile company base that probably has just barely made product market fit. They don't have enough historical earnings to be sort of, charging the top price. And so like if I could somehow see that this was going to, go into an adolescent growth curve, then, you'd want to pick it up right there, okay? And then of course okay, as the buyer, like obviously you want to buy something that you're super excited about, that you can get into and kind of not only own legally and financially, but also just kind of spiritually. You want to be proud about what you're doing. You want to be excited about what it is that you're going to do inside this business, right? The truth is that most of us, when we buy, we're probably not buying declining, but it happens, okay? That can be a turnaround opportunity, right? I've done that twice actually. And but the thing is some of us really want to buy on this growth curve, okay? But the thing is when you're buying a company right here, you're typically paying a really high valuation for the company. And so it requires a lot more cash. Depending on the size of the business, this is kind of where institutional capital lives. Like venture capital might write it up and then private equity will sort of, buy it at the top. And the concept that I want to kind of introduce to you right now is the fact that, well, I'm not introducing it to you. We've talked about it. It's in Buy Then Build. It's in the Acquisition Lab. We talked about it a lot. And it's the fact that acquisition entrepreneurship brings, real estate economics to entrepreneurship. And so if you were to buy a company, and let's just say it's worth, X dollars, okay? And over the period of time, I'm going to run out of markers here. Over the period of time, and you're going to buy this company, by the way, with we're going to use leverage. Okay, we're going to come in with our sort of 10% down kind of a thing. All right, and if that's too little, make it 20, whatever. Okay, but the thing is that over a 10-year period, all right, you're going to be building up this equity, right? You're going to be building up that equity. And so the thing is that like as the entity generates earnings, you're going to be building up your equity by paying down the principal, right? And so you build up into that. If this is $1 million, you build into that $1 million. If this is $5 million, you build into that $5 million, right? And the concept is you don't necessarily. Here's what I'm trying to say. You don't necessarily need this huge adolescent growth curve in order to have success here, okay? And the truth is that if you take this value of X, and let's just say you're going to grow it over that 10-year period, and it doesn't have to be 100% growth year over year. You can come out at like 10% growth, okay? And you're gonna create value because you bought it, by the way, way down here at 10% of X, and now you get to sell it at 100% of Y, okay? And so again, if you look at buying a company, putting 10% down, okay, and then using leverage and then growing that company at a 10% rate, and you own this company for 11 years, you actually are going to take your initial investment and grow it to 27 times, okay? So, I like to say in entrepreneurship, we often like to say, let's 10x this thing. Here's an illustration of 27xing this thing. in an 11-year period. And so yes, it takes time. You have to work at it. Okay, sell it earlier if you want to flip and all of this kind of thing, or you can sort of keep it here at Y, and of course it's going to generate some level of earnings for you that you can live off of. Okay, build wealth. Put your kids through college, whatever that thing is that you want. And hopefully you're buying that business that it doesn't feel like work, because you're figuring out what it is you bring to the table and what it is you want to do with your time. You don't need to be retired if what you're working on is something that you love doing. And once you start to wane, but still have a little gas in the tank, go ahead and enjoy your exit, because I'll be having this conversation with you when you're on the flip side. Thanks a lot.